Netflix shares are moving higher in overtime, about 3.5%. The streaming giant saying in its earnings release that its ad membership was up 35% versus last quarter, but that it doesn't expect ads to be a primary driver of revenue growth in 2025. Now, joining us now is DoubleVerify CEO Mark Zagorski. DoubleVerify is one of Netflix partners in advertising and media verification. It's great to have you on. That's exactly where I want to start with you, because Netflix also said that they are on track, the ad tech platform, to launch in Canada in Q4, more broadly in 2025. Given the fact that you are a partner, what is going into standing up this platform, rolling it out? How should investors be thinking about it? How should subscribers be thinking about it?
Yeah, I mean, look, obviously there's a lot to like about what happened with their earnings today and what they talked about on the advertising side. When you look at their ad growth and the growth in the number of subscribers in the ad-supported tier, it's pretty significant. You know, that puts them probably over 50 million subs. So their investment in technology to support the ads that are going to go against that group of ad-supported subscribers is a pretty big deal. It takes time, it takes effort. But the one thing that was really telling is they said they feel like they're under-monetizing their ad impressions today, which means there's a lot of potential there. They've got a lot of subs, seeing a lot of ads, and I think they're not selling them through at the rate they need to. That's why they're building their own tech. That's why they're partnering with other companies like Google and the Trade Desk to help drive what we call the fill rate in the business, right? Which is how many of those ads actually get filled at the highest price possible.
So what does that trajectory then potentially look like to fully monetize the platform and all of its offerings? I mean, earlier we were talking to Ben Silverman. One of the things he was talking about was the fact that sports are so key to driving advertising, and that this really speaks to perhaps why Netflix is pushing further into live programming and sporting events because of the flywheel it creates.
Absolutely. I mean, their investments in NFL and WWE, those are tent poles, right, that you can build entire advertising businesses around. And we saw the impact that had on folks like Warner this year when they lost the NBA, what that can mean to your overall advertising package, right? So you use those to bring advertisers in. That's going to do two things. A, it's going to keep advertising relationships stickier, and it's going to increase what we call their cost per million, their CPMs of all the impressions they have. Because now you can bundle. You can bundle WWE or NFL with drama programming or other types of sports programming, and get advertisers to stick, stay, and pay more money. So it is a multi-tiered strategy on the advertising side. It's content, it's technology, and sales.
Okay, Mark, and of course, I got to mention DoubleVerify itself is a public company, ticker DV, market cap around $3 billion. I'll put it nicely, the share of the stock is as affordable as it's ever been. So given the surge in advertising interest here and the need for clarity on making sure that these views are legitimate, what's the challenge in getting the revenue momentum that you need to get?
Yeah, I mean, for us, I think we've had a really interesting year where we've seen some dynamics change in our business with regard to where our revenue is coming from. A lot of it coming from social and short form video, which has taken over a big chunk of the ad dollar out there. But increasingly, and we're talking about Netflix, we've seen growth in CTV, which has been a bright spot for us, and I think will continue to grow over time. So we're going to lean into those areas like CTV, like social and short form video, which continue to grow for us. And we look at a really strong trajectory in the second half of the year, which is going to, eclipse the first half of the year's growth rate.